this goes back to the market intelligence that we were talking about earlier, that it's like going into an area, and depending on the socioeconomic classes within the area, what is the medium income, $100,000 lot versus a $200,000 lot could be everything. I'll give you a perfect example. You have a property, 84 acres in South Carolina, and we had it listed for like 650, something like that. And our broker, who should have told us this, I want to fire him, but he's like the biggest broker in the county. So like, but he's like, oh, no one's buying properties for like over like 220. That's like the biggest sweet spot. I'm like, why didn't you tell me that like 3 months ago? But we are now subdividing this parcel after the fact, and we're going to bring it to market. And it's going to be 3 tracks that are like 250 a piece, 240 a piece, right? And that opens up the market. And we looked at the sell-through rates of these properties, and they move faster. And so I think that it's like creativity like that matters, and understanding what actually sells well.
No, it partially did, and we'll come back to it. But I think that was actually one of the most useful pieces of advice we've had on the show in quite a while, because people hear all of these opportunities within the land space, and I think a lot of decision making is ego-driven. Of, I want to call themselves a developer to do a minor or exempt subdivision, but it's really, really understanding the product and the market within the product, because you're absolutely right. If you can double your money without doing any work, why would you not? As versus like just making 2.1x, and then if you're actually looking at that internal rate of return, like it starts getting skewed whenever it takes much longer. And I feel like people have gotten into this space thinking that this is the best exit strategy, and they don't even look at the idea of just the simple flips.